This meeting is being recorded.
Good morning, good afternoon, good evening, whenever you are. This is another part of Become a cTrader Master webinar. And today, together with the TopFX broker, we are going to talk about the another useful indicator for the traders. This time, it's going to be the Andrews Pitchfork. So the trading platform we are going to use is, of course, the cTrader platform, and you can find all of this information that I'm talking about when you register to the TopFX broker and open the account in order to find out that the TopFX cTrader is actually very useful trading software. So Andrew's Pitchfork, it's one of the most often used technical tools when you are kind of not that much a beginner trader and you know something about the trading, and if you try to monitor the trend, which is not always an easy thing to do, thanks to the multiple highs and lows a market may experience within like a broader move, right? So then basically you use Andrew's Pitchfork. As you can see, I got my Andrew's Pitchfork on the chart right now. It's already been applied. I will tell you in a minute how to do it. But what I would like to say straight on from the beginning is that Andrew's Pitchfork provides you a useful method to identify and outline any deviations from the main path of a trend. Okay, and that's kind of a huge thing. Okay, moreover, Andrew Pitchworks can provide you a channel that offers a support, a resistance, and a median line. And I'm going to tell you what is exactly what. So the Andrews Pitchfork is a drawing tool that you can access on cTrader by clicking here. So it's available on the trading chart. Basically, it can be applied to the trading chart. I'm using daily time frame chart of the US dollar together with these horizontal lines. These horizontal lines are the trading central lines, basically some kind of a signals. But don't worry about it. What we will be talking about is this feature here, the pitchfork. So let me just make pitchfork yellow. Okay, so we know what's going on. There you go, yellow. Everyone can see yellow, not a problem, I guess. Andrew's Pitchfork takes the form of the three lines. Okay, so there is a median line, the plus an upper and a lower equidistant from it. You can use these to highlight future support and resistance, possible upcoming breakouts, and of course many more. Who invented this technical tool? The guy called Alan Andrews, basically, and he invented this back in, I think, 1960s as a mean of predicting how much a market might deviate, to the upside or to the downside from its primary trend. So let me just now show you guys how to draw the Andrews Pitchfork, basically. So to draw the Andrews Pitchfork, okay, you connect 3 points on a trending market chart. Okay, 3 points. So you need first the point A, which is here, marks the beginning of the trend. Point B which is here, it's a reaction high. What I mean is that when it hits a peak before a counter trend will form. And of course, the third point is a reaction low when the counter trend ends and reverses. Okay. So let me just remove this pitchfork from the chart and start all over again. Where you go? You go here and just pitchfork, you click on it. Then you need to apply it on the market. Just click again. And what you do next is very simple. You just drag the line. This is the middle line. So that's the median line. Okay. Now you apply A, B, C. So beginning of the trend, we chose this point. Okay. Reaction high. The B point. There you go. Reaction high and reaction low. There's few of the reaction lows. I'm going to choose the last one. Okay. This is how you draw Andrew's pitchfork on the cTrader. There you go. Back to the yellow again. So everyone can see. So once you have selected these 3 points, you will see, of course, 3 lines on your chart. Well, they look like a pitchfork, which is where the tool gets its name. Okay. That's very, very easy. When you will be more advanced or experienced in drawing pitchforks, you don't have to draw it like I did, point A, point B, point C. You can, if your market hits its reaction low before it hits the reaction high, then you can select first the point C before B, and this will work just as well. So that's just for the beginners to understand exactly what you are doing. Please notice that it doesn't matter what kind of a trend you want to analyze. Okay, it can be an uptrend, it can be the downtrend. The direction is relative. It doesn't matter. You can basically draw the Andrew's pitchfork this way. Okay, so you know what I mean. I will give you more examples later. Okay. So we got the Andrew's pitchfork. How do we use it? If you have drawn your pitchfork correctly, then the median line, and the median line is here. Median line is in medium, okay? It should follow the broad trend. So the upper and the lower lines act as a support and a resistance levels, sending the price back towards the median line. Okay. Occasionally, the median line itself can act as a support or as a resistance line as well. When either the outer lines are broken, a breakout could be on cards, basically, right? This may signal the impending end of the prevailing trend. So that's the situation for using the Andrew's pitchfork, right? So let's just see what is the current, let's say, analysis basically using this Andrew's pitchfork. So in our first example, daily time frame chart of the euro dollar, the initial trend started at A, right? So we know that this is this level, then hit the reaction high, then hit the reaction low, then reaction low, then reaction low. We have chosen to use the third reaction low, giving the 3 points required to draw the pitchfork. Okay, so what's happened then? The lower support line from the point C correctly anticipated where the market would basically bounce up. Yeah, but it never touched, the market price never touched this level. However, the price action stayed above the lower line, and possibly it will stay in the future. When the market broke the support line formed on the previous point C, then some sort of the breakout and look acceleration out of the established trend has ensued. So what do we have here? As you can see, we got the prevailing uptrend, some kind of a someone says correction here, fine. We got the reaction high, reaction low. Market keeps trading higher, keeps trading higher, keeps trading higher. Never touch the median line in our situation. Never touch the lower reaction line. But at one point of the time, it breaks below it and then accelerates very, very significantly. Okay, that's another kind of a use of the end-use Pitchfork. So remember, you can use end-use Pitchfork on both uptrends, downtrends. Here we have let's say the example for the uptrend. Let's find out some other examples of using the end-use Pitchfork. Okay, so maybe British pound will be good. What can we do here? This is like a daily time frame chart. Okay, let's find out US dollar to the Japanese yen. What is going on here? All right, that's a very interesting. So we got this. Okay, let me just draw it. Okay, and just Pitchfork, put it on the chart. Finally, there you go. So point A, the low. We got some sort of the beginning of the correction on some kind of an uptrend. Fine. Now we put it here. And look at this, how beautifully this one goes. We'll take this line here. So there you go. Now, we got, of course, our first level, first point, basically. So we got the starting point, reaction high was done then. Correction, reaction B was done, reaction C, sorry, point was done. And then first bounce, second bounce, third bounce. And then almost hit the median line very nicely. Another test, another bounce, another test, another bounce. Again, way, way, way higher. And it looks like if we are talking about this, let's say, adjustments of the end-use Pitchfork, and if we are talking about the targets for the US dollar to Japanese yen daily time frame chart for the bulls, next target is the medium line somewhere here. Okay, so there is no breakdown yet to the upside. We are still very, very significantly bouncing from the lower median line. Okay, so the reaction support line, basically reaction support line. However you want to call it, it's good to know what's the correct name for this. But did you know that you can use multiple pitchforks? Okay, so I'm going to show you exactly what I mean. Let's go to the lower time frame. Let's say we want to go to 4 hour. We are now on the 4 hour chart. Let me just zoom out. There you go. As you can see, we can even now adjust our pitchfork to the pip. There you go. This is the low. That's still the high. Okay, that's fine. And we can put another pitchfork here. So what can we do? We will have a pitchfork inside the pitchfork. I know it sounds like a matrix for some of you. Don't worry. Bear with me a second, and you will see what I mean. Again, let's treat this one as our starting point. Okay, so let's put this one here. And some of you possibly know what I'm trying to do. Let me just drag it correctly. There you go. There you go. That's the reaction high. Yep, to the pip. That's the reaction low. You see, oh, a little bit lower, just a little bit lower. Very precisely, very, very precisely. Very nice. So we got pitchfork inside the pitchfork. And if you take a look at this, we got another movement to the upside, very sharp correction, movement to the upside. Then this area has been tested significantly multiple times. and bounce to the upside. Look when we stopped. Just somewhere, this is 4-hour chart. Please remember, this is 4-hour chart. Just somewhere around, oh, sorry, that was supposed to be zoom in. Just somewhere around the medium line, okay? Somewhere around the medium line. You see here, we can, for example, do this, okay, as well. And then the other information we got is, and that was the reaction high, that was the reaction low, and we bounced and went higher, we broke above the medium line, went somewhere here, go back down, tested the median line, and now we are ready to go somewhere here. So that will be some kind of a significant, let's say, resistance here around, let's say, 131.50, roughly, very, very roughly. Okay. So that's the situation when we are drawing the Andrews Pitchfork using the uptrend. Let me just take a look where we can have some sort of the downside price action. So maybe we will take a look. British pound, Japanese yen. Is anything going down recently? Not that much for our chart. Maybe on a bigger time frame, we will see some kind of a downtrend. What's been going down these days? Just recently, I think maybe oil. Oil should be good. Again, low. I mean, point A, B, and C. It should work quite kind of a nice here as well on the British pound to Japanese yen. What else do we have here? Do we have oil? Okay, we don't have any much of the markets that are trading down. Let's go energies. Let's go to okay, crude oil for our. There you go for our downside example. Let me just zoom out. Here you are. Look at this. Beautiful pitchfork will be drawn. Beautiful long-term pitchfork. Here we go. And just pitchfork, just drag it here. And this is what we are going to achieve. You got this, and the Andrews pitchfork is like that. And as you can see, up to the, let me just move it a little bit here. There you go. That's almost to the point, I think. Look at this. Beautiful price action again, and then there was a breakout here. So for that amount of time, that's over like a half of the year already. This Andrews pitchfork was showing the upper trend line here, and that was the resistance line. And after the breakout, the market come back and then bounced again. For now, the market flattens. Let's see if we can do something else. Let's see if we can do, for example, this kind of a movement here. Okay, it didn't actually work that well. Let's do this, for example. And well, this is the significant low, so that's the situation here. Very, very long pitchfork. Nevertheless, as you can see, this one is not very much predictive. Maybe on the lower time frame it would look a little bit better. I think that this low is very, very close to this one as well. So this is how it works on the crude oil. Let's find maybe some indices. Maybe we should take a look at the S&P 500. How about the S&P 500? Again, the example will be to the upside, of course. So what do we have here is this kind of a pitchfork. Let's say that will be the biggest, I think, the biggest movement to the downside. So let's say I want to use this one. This is the reaction. I just put the reaction low, reaction high, and let's say I want to use this significant. Will it? There you go. It went down straight on. So I want to use this significant low. And as you can see, this works very well this time. Point A, reaction high, reaction low, movement to the upside, almost hitting the median line, then a little bit of the sideways action, still above the lower support line, and then of course we are heading way higher. So of course, zoom in, and we can use another pitchfork inside again for the more, let's say, detailed view. Okay, so that's the level here. Let's say this one, and down, reaction high. Look at this, how it works perfectly going up. Let me just change the color. Blue, maybe something like this. There you go. And the blue one works very well as well. From the reaction low, sorry, from the point A to the reaction high, reaction low, and then we got test of the median line, test of the median line, test of the support level, test of the support level, bounce, test of the median line. Very nice. Andrew's pitchwork is this one on the S&P on the S&P 500. So I've just showed you some kind of ways that you can use the let's say the and use pitchwork in your your trading strategy, basically. But you need to know that there is one more trick in using the end use pitchwork. For example, you can extend the pitchwork or extend the upper lines, basically. Okay, so let me just show you what I mean. If a prevailing trend accelerates, okay, sharply to the upside, for example, let's say the trend is to the upside, so it's an uptrend. So if the prevailing trend accelerates beyond either either of the prolongs, right, lines on the fork, then you might consider adding an extra line to extend basically this this channel. For example, of course, to do this, let me just explain. To do this, you simply draw another parallel line in the same direction of the breakout as another at another remove from the distance between the upper lower line and the median. Okay, so what you do, for example, if you see like a very nice spike to the upside, so the upper line, the upper blue line will be violated. What you can do is like a copy, well, duplicate the pitchfork. That's one of the way, of course. So you can move this pitchfork like a little bit. There you go, because it will be holding your other points. So what you can do is you take the line basically, and you make it parallel to this one, to the upper blue line, and just put it here on the chart. Let me just show you what I mean, so you will be much more let's say kind of an arrow line. It doesn't actually matter what kind of line you will take. So what do you need is to align this line. Let's say, let's change the color for this line. The upper one will be dark blue, not a problem. There you go. You aligned it perfectly. Okay, now you just move it. Okay, so if you move it the same distance, like the distance between the median line and the upper line, that might be the next target for the bulls. Yeah, in a case of a serious breakout to the upside, so you can obviously monitor the situation. So that distance would be something like let's say something like this. Yeah, and there is another target for the bulls. Of course, it works exactly the same. If there's a breakout to the downside, you just move your line lower. For example, this blue line. Okay, and then let me just zoom out, and I will show you the other line. For example, arrow line for the. Let me just grab the arrow line. Okay, so it's the same one as this one. Align it to the, let's say, to the upper one. It's exactly the same technique. It's a little bit of the work, but it's very handy. Okay, so this is your line, and let's say you want to see another support for this for this market. Yeah, so you do exactly this distance here to the downside. Okay, so it's roughly something like this. So that's another. This is like this line is helping you to see targets for the breakout to the downside, basically, right? So this the first one on the lower time frame will be in case of a breakdown to the downside, blue line, and then if we are out of the big gray, I guess, Andrew's pitchfork, the next target is of course way lower. Okay, but the distance here must be, of course, the same. You can measure it using your eye. Basically, you can measure it using some kind of a rectangle, for example. So you put the rectangle here, copy it, put the rectangle here, so you know where to put your line. The key in that situation is that this line will align, almost perfectly with the previous fork line. Okay, so it will be looking something like this. For example, I can do this, and there you go. Well, maybe not an arrow, but so any other kind of a line. So you know what I mean. You know how to make it work. So very helpful tool based basically on the price action. You don't use any indicators or nothing like this. You just analyze the price action. Point A, reaction high, reaction low, and then possible support, possible trend line, and that's it. And you analyze on the higher time frames, you analyze the market on the higher time frame, you analyze the market on the lower time frame, and you see how the market is reacting on the trend. Does the uptrend is being supported in our situation, or the uptrend is not being supported, and the market hits some kind of an important line here, and it's about to either break out or drop significantly. So the Andrews Pitchfork can basically help you to determine what is the market next step, because as you can see, these Pitchfork lines go way in the future, of course. All right, so that's a very easy tool, very handy for the traders, and this is what I wanted to tell you guys about the Andrews Pitchfork. Thank you very much for staying with me. I hope we see each other next week when we talk about another crucial, important, and very useful tool for the traders in order to become the cTrader master in the future. Thank you very much for today. You've been great, guys, and I hope we see each other next time. So take care and bye-bye.